A popular question that I get asked by people that don't really know what I do, they kind of have heard that I do something in the financial markets, but don't really know what it is, how do you go about doing that? Where do you even know where to start? How do you know what investments you want to get involved in or what trades you want to get involved in? And how do you analyze the market? So in this video, I'm going to assume that you are brand new to trading, okay? And I'm going to talk you through what the various different analysis techniques are that you can utilize for figuring out what trades you want to be involved in. And also I'm going to talk to you about technical charting and how we use a chart to kind of put context around our trades and help us identify entry points. So first of all, let's talk about the different types of analysis. There are three types of analysis, two primary, but people say two primary, but actually there are three. You've got fundamental analysis, which is looking at things like what the central banks are doing, looking at economic announcements, economic news, to basically try and figure out what the central bank is going to do at their next meeting. In the currency markets, typically, a lot of it is driven by an interest rate differential, or at least the expectation of an interest rate differential. So all of the market participants, they spend a lot of their time trying to figure out what it is that the central bank are going to do, because the central bank obviously dictate what the interest rates are, and the interest rates dictate where a currency price is going to go. And that's something called fundamental analysis. That's something that we're not going to focus on in this course, but we do utilize in our own trading, and perhaps we'll put together another course at a later date where we talk through how we go through and how we approach fundamental analysis. The other type of trading is something called sentiment analysis. And sentiment is similar to fundamentals, but it's actually looking at what's affecting the market right now. So I talked about in fundamentals that you look at the interest rate differentials and the expectation of where interest rates are going to go. Sentiment is sort of like a much shorter term version of that. So we're not looking at the economic indicators as such. We're looking at fundamentally what is driving the market right now. Has there been an earthquake somewhere? Has there been a disaster? Is the markets focusing on what the stock markets are going to do, and how is that going to affect the currency markets? Is this an oil trade? For example, if you're trading a commodity currency like the Canadian dollar, you would want to know what oil is doing and what the sentiment is towards oil, because that will give you a good idea of where the Canadian dollar is going. So it's kind of sentiment analysis is things like that. It's figuring out what the market is focusing on right now and what's driving the markets. And then you invest according to that. The final approach to the markets is something called technical analysis, which is the primary focus of this course, and really is a starting point for all traders. Every trader, whether you end up doing fundamental analysis or sentiment analysis, you're going to want to have an understanding of the technicals, because technicals help you to fine tune your entries to the point where you're not getting into trades and you're not sort of going out of the money too much. Because one of the problems with fundamental analysis is that you have a direction, but you might not be right on your direction for 6 months. Are you going to hold a trade for 6 months before it makes you money? Not really. You want to time your trade so that you've got the fundamentals giving you the direction, but you use the technicals for entry. All right. And when we talk about technicals, we talk about charts. There are many different charting platforms out there. There are charting platforms that will come with your broker. Some of them will be web-based. Some of them will be sort of local to your machine, something like MetaTrader 4. And then some of them won't be with your broker. So you get these companies out there that just do the charting, like NinjaTrader, for example, or TradingView. TradingView is our favorite charting platform. It's our charting platform of choice. And I'll put a link beneath the video here if you want to go and check it out. But I love TradingView because it's web-based. I can use it on any one of my computers. Even if I'm not near my computer, I can save my workspaces and look at my charts from anywhere. I could go on holiday, and as long as I've got an internet connection, I can just log on to TradingView and bring up my workspace as if I was sat in front of my office. So I do love TradingView, all right? But what is a charting platform? So a charting platform is similar to what you see in front of you here. Well, it is what you see in front of you here. It basically shows you, it puts context around the price. It shows you where price has come from in the recent past, which kind of gives you an idea as to where it could be going to. So looking at this chart here, and we'll talk more about this as we get involved in the rest of the course. Looking at this chart here, we can see, or I can see, that it's moving down. So by the fact that it's moving down, I want to start getting into trades where I can sell the market, because I think if I sell it now, there's every chance that I will be able to make money on it because the market's moving down. Okay, and that's what charting platforms allow you to do. But I'm not going to dwell too much on the analysis techniques in this chart in this video here, because I do that in other videos that you're going to see later on. Right now, I just want to talk about the charting platform itself, and the different types of charts that you can use. In front of you, you can see that I've got, well, you may not know, this is something called a candlestick chart. All right, and a candlestick chart, let me expand this here for you. A candlestick chart is one where you can see that you've got a lot of information on there. So this here, each one of these bars is called a candle. And the reason it's called a candle is that you've got these little things either side of it that kind of look like wicks of a candle, right? I really quite like candlestick charts. It's not the only type of charts that I use, but I feel that it gives you a lot of information. So by looking at one of these, I can tell where the high is of that particular period of time, where the low is, where it opened, and where it closed. All right, let's zoom in a little bit more so we can really look and analyze one of these. So each one of these candles represents a period of time. I'm on a 15-minute chart, so every candle is going to represent 15 minutes worth of price data. If I look at a candle, a green candle signals that the open, which is the bottom of the candle, not the wick, but the bottom of the body of the candle, which is this color part here, signals that the open was lower than the close. So it closed higher than it opened, which means that it was bullish. The markets went up. All right, so the market opened down here. It moved down to this low here, which is indicated by the wick. It then moved up to this high here before eventually closing at this level over here. Okay, so that's what a candlestick chart does. Just by looking at it, I can tell where it opened, where it closed, where the high was, and where the low was, which is all useful information, as you'll see as we progress through the rest of this course here. That's what's called a candlestick chart. It's very visual, it's aesthetically pleasing, but you do have other charts available to you. So if we were to go up here, well, you can't see this on the screen, but in TradingView and in all of your other platforms, you have an opportunity to change the type of chart. So I could change this to, let's say, something called a bar chart. Now, a bar chart is similar to a candlestick chart. It shows you the same information, but from my perspective, it's not as nice to look at. You know, you don't get as much from a bar chart as you do a candlestick chart, at least not at first glance. Now, I might be biased. I started off looking at candlestick charts and I kind of never really went away from it. So I might be biased in that respect. And you know, I know a lot of people do use bar charts, but I think they offer pretty much the same information, but candlestick charts are just easier to like look at and in an instant understand what's going on. So that's a bar chart. You then have something called, well, you've got different types of candles, Heikin-Ashi candles, Renko, range. We won't go into all of those there because they're kind of specialist candlestick types. They are useful, but I don't think you will be using them. The only other one that you might look at to begin with is something called a line chart. And what a line chart does is it removes all of the noise. So with the candlestick charts and the bar chart, you saw the open, the low, the high, the close. With a bar chart, with a line chart, you don't see any of that at all. So all we see are the closing prices. And that is, so some of you say, well, that's a bit of a disadvantage because then you don't know what happened in any one particular candle. To an extent, yes, but also to an extent, actually it clears up the price action a hell of a lot because then you can kind of just see where the price is going. And you get the much bigger picture as opposed to looking at a candlestick chart where sometimes it can get a little bit messy. It can get a little bit noisy. And for someone that's new to it, it can be hard to read. So there's no real sort of best chart. It's really the one for you. You know, we spoke about this when we were talking about brokers. You know, brokers and charting platforms, it really is kind of like a personal preference. You need to find something that feels comfortable for you, that you can identify with and you can believe in, because trading is so much about belief. It's understanding what you're doing and believing in what you're doing. That's the only way that you're going to be successful in the long run. You can't do what somebody else is doing. You really have to kind of focus on you, what works for you. And then once you understand what works for you, then just do more of that. And that's how you're going to be successful and make money in the markets. Okay? So thank you very much for watching, and I'll catch you in the next video.